this isn't just a scam. It's a blueprint for exploiting banking loopholes. So could your branch where you are working is next? It all started with one man, a master manipulator, who posed as both a financial advisor to corporates and a representative of banks. And what was his pitch? It was to secure bulk deposits, and he offered unmatched returns to these corporates for whom he acted as a financial advisor. His efforts brought in Rs 604.33 crores in term deposits from multiple government organizations and corporates. But his real goal wasn't to help them, it was to betray their trust. Here's the genius of his scam. The original term deposit receipts went to him, that is this middleman, while corporates received perfect forgeries. To the corporates, everything looked legitimate. But the original term deposits held by the fraudster became tools for something far more malicious. Using forged KYC documents, he applied for loans against these original TDRs. The bank, failing to spot the forgeries, sanctioned loans worth crores, all while corporates were still unaware. The sanctioned loans were transferred via RTGS into a network of accounts across different banks, and by the time everyone raised a red flag, the funds were long gone. The fraudster exploited not just one bank but the entire system, leveraging weak controls and fragmented processes to vanish Rs 600 crores into thin air. But how did this happen? Here are the critical lapses. First one was over-reliance on intermediaries. The next was failure to verify TDR authenticity. In this case, documents were approved without in-depth checks. Then third was lack of escalation. In this particular case, bulk deposits over Rs 1 crore were not reported for Treasury for the review. Then fourth was weak loan protocols. Here loan applications were not matched with direct depositor confirmations. And last one was RTGS loopholes. These big RTGS transfers were not flagged for unusual patterns. Lastly, here's how bankers can close these loopholes. First one is personal verification. The next is dual approval protocols. This requires dual sign-offs for loan against bulk deposits. The next is Treasury oversight. Here, bulk deposits over Rs 1 crore must be flagged for detailed scrutiny. Then we have RTGS monitoring. Here, use of AI to detect unusual transaction patterns in real time. And lastly, we have regular staff training, in which we have to make staff equipped with various tools to detect red flags in the documentation. This wasn't just Rs 600 crores. It was about the trust that banking institutions are built on. Fraud doesn't just steal money, it steals trust. Let's build upon processes that can't be broken. So tag your fellow bankers and staff members in the comments to ensure they are ready for next challenge.